Welcome to binary.com. This is the weekly live room starting at 8 a.m. UK time on Mondays. Thank you for joining. This is September 29th, and we're now actually close to the completion of the September trading month. Tomorrow is the last day of the month. It's always a bit of a riskier day, in fact, to trade. And then, of course, we have the new trading October month on Wednesday. Before we take a look at charts and any price action, it is important to note this risk disclaimer. Trading for exchange, global financial markets, and products are considered high risk, and they may not be suitable for all investors and traders. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for educational and informational purposes only. By continuing watching this webinar, you agree with the disclaimer mentioned here. For a copy of that disclaimer, please contact binary.com. And as always, I thank you for your attention on this topic. To get an email when the recording is ready, go to blog.binary.com/weeklytradingroom and you will get a warning when the recording is ready, so that just in case you can't watch the live session at 7 a.m. GMT time, or 8 a.m. UK time, then you can watch the recording anytime after that. As always, we're going to take a look at these specific 5 pairs at the very minimum. However, just a quick look at what kind of calendar we have this week. We have, most importantly, non-farm payroll on Friday, and Thursday, the euro interest rate. Those are the 2 biggest things to be looking out for. So with that said, let me now head over to the charts and we can take a look at the euro dollar together. This is a monthly chart. Now, of course, obviously the September month has not been completed. So in theory, a lot could happen, a lot could be different 1.5 days from now or 2 days from now when this candle is closed. But if and only if it stays something like this, obviously we see that the pair is looking very bearish in its outlook. We have a very bearish candle. The close is the current price is very near the low, and that has been so in August and July and May as well. And you can see that we're following through on this downside. The candle, this month's candle, is also relatively the biggest of all of these downside candles. So it is looking like a very good break of the rising wedge, which we've been keeping an eye on, these 2 green lines. And the rising wedge completing probably one part of a triangle here, basically a triangle that is then completing this triangle A, B, C, D, E, and that triangle basically completing what could be a bigger A, and the triangle completing B, and now we're going down for C. And that definitely seems to be holding true. We've talked about this before in this session together, and that seems to be indeed happening as we speak. Now, of course, there's no guarantee that price will necessarily have to push through this bottom, have to push through the trend line. But it does look, if the analysis is correct, it does look like it will do so. The first target is 113 minus 272 target, and even parity 1-to-1 minus 618. Big targets, but before we get there, obviously some support levels to break through before price can fall that far. Price has fallen already 1,350 pips from this very top down to this very bottom, as you can see, in about 4.5 months of trading. And specifically this last fall, of course, here from this spot, what was about, how many weeks ago? Let's take a look. About 13 weeks ago, fall of 1,000 pips, and we've seen an acceleration of the downside ever since then. And the price is hitting 126.50, obviously after hitting the 140 level all the way here. So it is a pretty big fall. And recently, we've actually broken through this support level with a pretty good weekly candle. A weekly candle that closed last week, a weekly candle that is bearish, a weekly candle that closed near the low, and fully breaking through this 127.50 level. So to me, any upside looks like a retracement for more downside. Targets could be to 125. It's a psychological round number. Target could be, for instance, well, we have to put fibs on smaller levels here. I could even put a fib maybe like this. 124.60, 125 could be the target for the moment. If we break through this bottom, 126.60, and after that, after 124.50, 122.60, and after 122.60, it seems like 120, 120.40 zone. So you got about 200 pips in between all these targets. 126.50. Let me write that down. 126.50 is the moment, is the next level to be aware of. Then it seems like 24.50 and 25. Then 22.50, and then 20.50. Right? So those are the support levels to think about. For the moment, though, those are just bounce levels, and price is very bearish. And any retracement to the upside, I'm looking for downside continuation. And I would not expect price to retrace much of this weekly candle. Maybe it max back up to the 127.50 broken level for continuation to the downside. At the very, not the very max, but that would be probably a decent correction as is. And if we put a fib on this very last down move on the daily chart, for instance, any of these fibs, in theory, could be bouncing spots for downside trend continuation. All right. And remember very clearly that I said after this zero downside on the interest rate decrease last month that we're probably going to see a few bottom breaks, and that happened. This was 1, this was 2, this was 3, and now we got the 4th and even the 5th bottom break. So that certainly is true. And if you look at the 4-hour chart, the euro dollar is just neatly traveling in a very, very big downtrend channel. Right in here like this, and it's speeding up ever more and ever more, right? Look at that downtrend channel, beautiful downtrend channel. And after already a pretty substantial break here, consolidation and even more speed to the downside. So as long as price stays in this downtrend channel, I'm expecting more downside. And if we then zoom in all the way to the hourly chart, then personally, I would not expect much more resistance. As I said, to the blue line, I would actually expect price to, roughly speaking, let's see, put a fib on this. Yeah, roughly that 38.2 fib is probably the max I'm expecting price to go, and turn around from this 127.50 for more downside. All right, if it gets even there. So obviously very bearish, and we could see maybe some bull flag here and then follow through. Friday is NFP, and Thursday is the ECB interest rate. But technically speaking, I'm expecting some kind of weaker sideways correction and then follow through to the downside. Maybe even 23.6 fib could be the bouncing spot here for more downside. Oh, sorry, my drawing tool is not working there. All right. So that's my expectation for the euro dollar. Very bearish in all its manner. Just looking, in my opinion, for when and where. Before the hourly bullish candle that we see here right now, I was even thinking that this could maybe even continue lower as we speak. But we do see a bit of a bounce now. So now maybe a bit of retracement is more likely with this bullish candle. But it's still in the early phase. Let's see. Maybe it could still continue lower like this. But some sideways correction seems more likely now at the moment due to last hour's upside candle. Pound dollar daily chart, same bearishness. You'll see on all pairs dollar strength. And to be honest, I expected it when I made a prognosis expectation of this year. I said I thought a pretty decent chance of dollar strength kicking in the second half of 2014, and that seems to be true. And specifically in July, I was warning for a big uptrend on the dollar, and yeah, that seems to be fully playing out. Against the pound as well, we see a downtrend of 3 months lasting 1,100 pips. not as long and as many pips as the euro dollar, but pound dollar too, very bearish. You can see the downtrend here. Pound dollar making lower lows and lower highs clearly, and recently, if anything, accelerating that downtrend right in here. Price made a sturdy retracement, but now it made the page, turned the page, and is moving down again. It respected the 38.2 fib, or when fibbing the very last part, the 78.6 fib, and now broke the support trend line right here. So there is a good chance that that is a break for more downside. Looking at the weekly chart, where we see, for instance, big wicks on top of the candle and a bearish close last week, and a monthly candle that, let me take away this fib for the moment, that is also looking decently bearish, although still pretty far from its low at the moment. That's a bit different than the euro dollar, but here too decently bearish. Of course, it's important to see how far it closes away from the low. The closer it is to the low, the more bearish it will be, and the more bearish the month of September, of course, will turn out, and how much effect it will have on October. But overall, the structure is certainly bearish, just like the euro dollar. Not as bearish because the long-term perspective here, although price could fall easily to retrace all this upside, it's not as bearish of a structure as the euro dollar. But obviously price could retrace easily to retest these bottoms here, where I have the green line at about 148. So here too there's plenty of space left to move down. Alrighty, so if we then zoom in to daily chart and 4-hour chart, you can see price is breaking through that support line here, and I would be expecting follow through on the pound dollar unless a correction is happening. We did bounce off the minus 272 target. For the moment, I'm expecting downside continuation. The only thing that would really change my mind about the continuation of the bearishness is, first of all, a break of this resistance line and a break of that resistance line and this resistance line. So we need a break of the 163 zone, kinda. Then I would be more cautious. If price stays under these levels, under these resistance zones, then I'm expecting more downside continuation. Break above these resistance zone, and long term is still looking down, but the intermediate trend might be turning up, and then I would want to be cautious again. Alrighty, with that said, let's head over to the AUD USD. Now the AUD USD is a bit of the oddball here compared to the pound and the euro and the dollar yen. And the reason is that the AUD USD has had a consolidation that lasted 1, 2, 3, 4, 5 months. And the AUD USD was not displaying any weakness or basically any dollar strength until this very month of September. And then the Aussie kind of played a catch-up because it then started to fall like crazy. And it's fallen for a dazzling 700 pips in 1 month so far. So as I told you, the euro dollar fell 1350, the pound dollar has fallen around 1100. The AUD USD has done 700. But instead of taking 4.5 or 3 months, it only used 1 month. So it isn't quite there yet, as it hasn't quite moved the same amount, obviously, as the GU or EU, but it sure did a lot in 1 month. And such a strong bearish candle in 1 month's trading is a strong breakout signal. It represents a strong breakout out of this consolidation of 5 months. It resembles a strong continuation of the downside trend that already was, or momentum that lasted here and here and here, and now that could continue. So certainly on the AUD USD, when looking at this strong breakout candle, I am expecting follow through to the downside. That doesn't have to mean immediately, doesn't have to mean right away day one, but throughout October, I would expect October to have a bearish close. I would at max expect maybe a lighter retracement of the month of September candle, probably 38.2 would be a logical turning spot. Even 23.6 fib at 88.50 or 89.50. 50 fib, I would say, is probably, reasonably speaking, the very max before I would expect downside continuation. The target, if we put fibs on the very first correction here, from here to the orange top and orange bottom there, and from the green top to the green bottom, we can see two fibs targets lining up, minus 618 and a minus 272 at 83.20, 83.60. That would be the target. So max a bit of upside. At max, maybe not even that, before boom, that fall. Could be immediate fall, by the way, as well, down to those targets. The breakout candle, strong candle, is in my opinion enough to have a decent expectation of that. Big candle, all right? So that's all I need to know for the moment. Dollar yen, same story. Big upside candle, about 600 pips so far. Very massive. The upside has lasted 3 months and 900 pips. And we can see a follow through of the dollar yen impulse to the upside here. Impulse, impulse, momentum here too. And now again, looks like price is headed, first of all, to the minus 272 target at 111. 110, by the way, is a psychological resistance level. And if price continues above 111, then maybe even all the way up to minus 618 target at 120. Those are the targets, though, after this up, down to 38.2 fib, and boom, that would be the target, and probably even extension up, in my opinion. Why? Because we're breaking with so much momentum that it seems like we have enough speed and momentum to get there. This consolidation was lasted long, but finally we did get the break, and the break was to the upside. So looking like a dollar strength here against the yen as well, and we'll be looking for follow through in the month of October for that dollar strength against the yen, and here you can see that follow through here to the upside. And as we zoom in, it looks more and more likely that this is probably just one part. Oh, sorry about that. Drawing tool is not working that well. This is just one part here, part 2, and this is part 3 of probably 5 parts that we will see to the upside, in my opinion. XAU USD, bearish as well, not as bearish as XAG USD, that is breaking towards new lower lows on this. For instance, let me make the chart a bit cleaner for you here. As you can see here, the XAG is falling through some bottoms as we speak, with a break of 1820. Now, XAU USD is not breaking the bigger bottom like XAG USD is. On the weekly chart, you see price is still above the 1180, but price is falling towards the 1180. Had a bit of a recent stall at 1200. Still overall, though, making lower lows and lower highs after the break of the wedge, the orange line here. So looks like there's a decent chance of more downtrend continuation in this downtrend channel. On the 4-hour chart, that channel looks like that. If price does break out of the downtrend channel and breaks out of this purple line, I would be cautious of the downtrend. If price stays in that channel, it looks good for downtrend continuation, and price could make a fall down to 1180. A break of 1180 obviously would be needed before any significant downside could be expected below the blue line. So bearish, not as bearish as XAG, maybe not as bearish as the Euro and Aussie, but definitely dollar strength here too. And XAU also is pushing down a bit with less momentum, but it could continue the downtrend too. And as long as it stays in the channel, I would be looking. Well, I don't trade XAU nowadays as much, but normally speaking, if I would be trading it actively, because I trade more the majors now and crosses, then technically speaking, I do think it's looking like a good downtrend continuation, with the blue bottom at the moment as the primary target. Alrighty. So thank you for your attention. We'll be back next month on Monday, October the 6th, and we can take a look at how indeed the first week of trading in October has been completed. Thank you for your attention, And once again, blog.binary.com/weekly trading room is the way you can get the recording of this session, even if you can't make it. We'll be back next week. As I said, wish you all a good week, good trading, and talk to you soon. Cheers.